Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day for August 12th, 2021. So today we're going to talk about Moderna. It's a stock that's been in the news all week. And if you've been following it or if you missed it, I'm going to give you the whole synopsis of kind of what's happened. But basically this stock has had about almost a 400% run this year. Okay, it's one of the only pure play COVID-19 vaccine kind of providers out there. So, anyone looking for that specific risk profile and to get exposure to that has been trading Moderna stock. And so, this was a $20 stock when it went public a few years ago, but they rapidly were able to develop, the vaccine, along with, some other, manufacturers, but they're really one of the leaders in the mRNA technology, which is what, the main vaccines use, right? And actually their ticker symbol is mRNA. So this is again, one of the major players there. So kind of keep that in mind as we're kind of walking through this and I mean, this stock really encompasses everything that's been going on, recently. So I think it really has gotten caught up with, and I wouldn't call it a meme stock, but the Reddit boards, and the Wall Street Bet, kind of consortium that has caused a lot of these random stocks to run up, talks about Moderna a lot. So I follow, some of these things that, where it shows how many times certain tickers have been mentioned on, certain boards, and Moderna's been up there all week, in the top 3. So there's a bunch of short-term traders, I think trading the stock. And, when we get and look into the chart here, you'll see just how the velocity of the move that we've seen just over the last month. I mean, the stock has doubled in the last month, right? And then it's just in the last 2 days, it's come down quite a bit. And so we'll get into all that. Bank of America came out with a note earlier this week, and they're on the other end of the spectrum where they think we're at kind of a peak COVID vaccine point. And so it's kind of all kind of downside and uncertainty, from here, for a stock like that. So let's get into it. But, just want to preface that, I've got some awesome charts that, we're going to look at. And, the whole point of all of these trade of the day kind of analysis is, to give you different like subsets of things to look at, right? There's no exact, blueprint stock that we look for, right? It's can we take a situation, for all it's worth and say, is there an opportunity here to make money, utilizing the triple income wheel strategy, right? And so this is a stock that's very volatile, but as you'll see, we'll get into some of the risk reward of the options. There's a lot that makes sense, right? And as long as you can pinpoint the levels at which you feel comfortable with, and you've got some reasoning behind it, you can find again your target return, and with a very big margin of safety, especially in a stock this volatile, right? And so that's kind of the whole point of analyzing these. And so let's get into the stock profile here. And so, and you can see, so the stock literally yesterday traded down 16%. And so our strike zone, just to kind of keep it in perspective, is 272 to 325. I think 325 is even high given the volatility of the stock. So, we're kind of estimating a required margin of safety of 15%. But I think as much as the stock has moved, and that's again where you utilize this information, but then you can make small adjustments over time. And anytime I have a situation like this, especially when you have a stock as volatile as this one, so you've got a mean implied volatility right now of 85%. I mean, that's probably on the high end of anything we'd really look at. But it is a very liquid stock and liquid option based, so it obviously makes sense to take a look at it. But anytime I have a situation like this, and you'll see the deltas almost seem to be mispriced when we look at with the cash secured puts, and so you really need to kind of adjust for additional uncertainty when you have a stock at this level. So it's been a crazy ride this week. So let's actually take a look at. I have a couple stock charts here I want to show you in different time frames, because it kind of breaks down the situation nicely. And so here is kind of the longer term, kind of year to date chart. And again, this company went public at like $20, a few years ago, and it kind of ramped up to about 100, during the pandemic, but as it was getting started, 2020, but really has taken off just actually recently here, right? But it's in obviously a very strong uptrend. I mean, you can see just how wide, some of these margins are between not only the stock, but between this 50-day and 200-day moving average. Like, you hear us talk about that. Anytime the 50 days above the 200-day, it signifies the stock's in an uptrend. So that's one thing I like about this, just as far as, is it a situation that we can write cash secured puts on and feel comfortable with it? Because I think that this stock, even though it's come down quite a bit, and we'll get into the numbers here in a second, but it's got a ways to go before it gets it shot up so high that it has a ways to go even to get down to its 50-day moving average, right? And so anytime you have a stock where the price is above the 50-day moving average, the 50 days above the 200-day, it's a pretty strong uptrend. But it doesn't mean that the stock can't be volatile and pull back, and that's what we try to do, right? We try to find situations where we can give ourselves a margin of safety and maybe pinpoint some areas where we would literally be okay owning the stock, even though it's a volatile stock. And so that's really what we're trying to do here, is trying to pinpoint what is the right level to sell a put, right? We know that there's options available because it's a very volatile stock. So it's really comes down to what are the right levels that we feel comfortable with, right? And so you can see this is just year to date, almost 400%, 375%. It hit a peak. This was just Monday, a few days ago, of almost $500 a share. And so when this stock hit $500 a share, it was roughly $200 billion market cap stock, right? And so that is very comparable to like the huge pharmaceutical conglomerates out there. So your Merck's, your Bristol Myers, Pfizer's actually a little bit larger. I think they're around 250, but you get the point. This company, who's basically got one vaccine and one successful vaccine and some good technology, is being valued, or was being valued, at about the same market cap as these huge 100-year-old conglomerates with huge pipelines and huge portfolios and all this stuff. So that makes you kind of scratch your head in itself. And then obviously the velocity of this move has just been insane. So this is kind of where you question, is there something to that Reddit crowd just in the last month that's kind of caught wind of this? But I think this also kind of overlays with what's been going on with the vaccine in relation to this Delta variant, right? So the Delta variant really has kind of been out there for about the last month, and you can basically see since, essentially just the last month, the stock has doubled in price, right? So it's added $100 billion of market cap just in the last month, right? And then the last 2 days, it's sold off over 20%. So that kind of crazy move higher with that velocity followed by a huge sell-off like that, that's kind of a classic blow off top. And typically a stock's not going to quickly come back from that kind of volatility, especially when it pulls back, 20% in 2 days. So I don't think you're going to see this stock peaking again like that for quite some time. And in fact, it's probably going to end up coming all the way down even further to some levels that I think make it a more reasonable valuation. It's got to come down to a level to where people aren't going to be too worried about valuation, right? Because the problem with a stock like this, and I'll get into the earnings chart here in a minute, though, is that it's the future earnings are so uncertain that you can't justify a huge valuation at this point, because literally their future earnings could get cut in half, and actually the consensus is that it'll be more than cut in half within a couple of years, right? So this is really kind of a peak, almost one-time situation, windfall for this business. So that's something we got to take a look at, right? And so now let's take a look at just the last month chart, and I put candlesticks here so we can kind of see some interesting like gaps and things like that. But I mean, you can see just what this is literally just the last month. So this starting point here is like July 9th, right? And then you had this huge ramp up. This was Monday of this week. And so we had a huge up day. The stock was up, like $80, in a day. And that was kind of a red flag in itself, even after this move. And then the next day, this was Tuesday, it popped, even a little bit more. So it actually made a new high, but then by the end of the day, it sold off and closed near the low of the day. And this was the day that Bank of America, if you've been following the story, Bank of America came out and basically said their price target is 115, and they reiterated that 115 is the level that makes sense for them. Even as this stock is at $500, they're saying that this 115 level makes is the only thing that makes sense, right? You can't justify this business with its pipeline totally relying on the COVID-19 vaccine to be a $200 billion market cap company, comparable again to some of those larger pharmaceutical companies that we talked about. And that was their take, is that we're probably seeing peak vaccine right now, right? I mean, a lot of folks are saying that this Delta variant, as quickly as it's spreading, it's probably going to get us closer to herd immunity than we've ever been, right? And so if you get a lot of these folks that are unvaccinated, catching the virus, well, they've got natural immunity now. The people that took the vaccine have immunity. So you're getting, again, that kind of herd immunity mentality, which means you're going to probably rely less on the vaccine going forward. And it's up in the air whether or not people will actually take, a COVID vaccine every single year like they do the flu shot, right? And I think that's Bank of America's point was, in order to justify a valuation with this stock at $500, you've got to have like billions of doses, purchased for the next like 15 years to justify that kind of level. And so, you just look at the numbers and you're like, yeah, that makes zero sense, right? And so the reality is it's probably somewhere in between there. I don't think this stock's going to go down to 115 by any means, but I also don't think it should have been at 500 either. And so when I look at this chart, I see how much this is sold off. Look, when you have a move like that, it's tough to even find a reasonable level of support. I mean, these are just daily moves, right? It's not like this we can look at a longer term chart and say, well, this was the low, the recent low, and I think that should hold. Well, this was the low of just like 2 weeks ago, right? And I don't know, why we would think that one would hold, right? So you look at this chart and you're like, I don't see anything really, other than this psychological level of maybe 300 that would hold between where it's at right now, 385, and all the way down to 300. So, I mean, this stock could easily move, that far. And, this is obviously something we need to, keep our eye on. But, we're looking at this from a short-term perspective. So the September options we're going to look at, they're only 37 days out. So we're really looking at the next month. I don't think anything's going to happen with the stock that would push, the stock beyond some kind of, reasonable level down here, right? I would say this, 300 level on the high end. And, if you're familiar with technical analysis, and I don't claim to be a technician, but, I follow some of this stuff, right? Anytime you have a gap like this and you got a stock that's, could potentially end up coming down and filling this gap, a true technician would probably tell you that, gaps are meant to be filled. And until the gap is filled, the sustainability of any future rally is questionable, right? So a technician will probably look at this and say, look, this gap probably needs to fill before we can even think about moving higher. Well, that gap's pretty darn far away, right? It's 260 to 271. And so that's kind of the level I would feel comfortable with. And so, if we can get something way down at that level, that essentially gives us, you'd have a purchase price roughly 50%, from its peak, which is pretty good. And I think longer term, if you bought this stock, in this range, I think you'd probably feel pretty comfortable, and I'll kind of tell you why when we look at earnings here in a second. But that's kind of where we're at, right? I mean, it's just been a crazy move, but the point being is that just because it's crazy move and just because it's been volatile doesn't mean we can't find a conservative option that gets us our return to where we're actually taking a very good risk reward trade, right? And that's the whole point of taking a look at different companies like this, right? There's usually always an option that could potentially make sense, with any company. You just need to make sure that you feel comfortable again with that margin of safety and that level at which you'd potentially purchase it, right? So that's the chart. We're gonna be looking at that gap. And so keep that in mind. 260 to 271 would be kind of the level, and that's actually the low end again of our strike zone. So that's really the range I'm targeting, is this low end of the strike zone. There's no reason to go out and be a hero here with, even though, you probably would be okay, probably even at this 325 level, just in the short term. I don't think there's any reason to go out and try to be a hero and sell a put even at that level. If we can find one closer to this low end of the range, I mean, that's the level I'd be looking at. So, just real quick, just so you know what the consensus estimates are. And again, most analysts are assuming that Moderna's earnings are peaking in 2021, so their fiscal year 2021, which is what's showing up right here. So it's this year they're expected to earn about $30 a share. Now in 2022, the estimate's right around $25 a share, right? So if we're looking out here, it'd be roughly here. But then in 2023, they're literally expected to only earn $11 a share. So you're coming all the way down, to this level out in 2023. So you're going to see a completely different picture the next, 2-3 years with earnings, unless they produce vaccines for, other viruses and things like that, which they've got some in the pipeline, but there's no way that it'll get fast tracked and they'll be able to probably get those things out and moving in time. And, even these estimates assume that they have some other, I think, products coming out. So you've really got a much, much different picture here where you've got almost, one-time type earnings that are going to fall off over the next 2 years. And so when you look at, even this 2023 estimate of $11, you think in your head, well, what valuation could you justify based on that, kind of trough earnings level from 2023 that's being estimated? Well, if you even just threw, say, a 30 multiple on it, which, some of these, I would say Pfizer and Merck and some of those other big names, they've kind of averaged probably 25 to 30, from a PE perspective. So you could reasonably justify something like that. So if you threw a 30 multiple on, $11 of earnings, you'd be kind of right in that, 330 range. So, I think there's a case to be made that you might be able to feel comfortable kind of in the low 300s from a valuation perspective. Certainly probably not the high 300s or, not 500 like we just saw, right? So that's kind of where my head's at is, between 25 and 30 times that 2023 number would get you right in that 260 to basically 330 range, which is, right essentially what our strike zone is. So again, that you guys know that anytime I have these, different data points kind of converting onto, one level, it just makes you feel all that more comfortable, right? And so we have, not only do we have the gap, we've got the gap right around 270. We've got kind of the low end of, what I think a reasonable valuation is based on 2023 earnings, kind of right in that 260 to 270 level. And then, our actual strike zone, the low end of it's around 270. So that's really seems like a really solid number, based on all those different data points from my perspective, even given the volatility of the stock. So let's take a look at the puts. And again, we're doing September 17th, which is the monthlies. And so let's take a look. So I'm not even going up above 300 there. I'll just kind of highlight some of these guys. So I look at these, and we're looking at risk reward. And again, I really think that a lot of these high vol stocks, some of the deltas could certainly be mispriced. It's hindsight's 2020 thing. Like when it actually ends up happening, like you look back and say, wow, that delta actually was correct because it never got anywhere near that, or that delta was probably mispriced because the stock continued to move lower. So anytime I see a situation here where I can get my 1%, which again I'm targeting this 270 level, so this is what makes me feel comfortable with a stock like this, because initially you look at this probably and say I'm not touching that. But you got to peel back the onion a little bit and say, but at some price it makes sense, right? At some price, the risk reward makes sense for me to make this trade. And so our base strategy, looking at 1% average monthly yield, well, at 1% average monthly yield, we're getting a 30% margin of safety from here. And by the way, there's no earnings risk, right? This is all just continued volatility risk of what's been going on recently with the stock. But the delta is 7. So when I look at this and say, okay, well I'm getting my 1%, but it's a delta of 7. So some of that intuitively just doesn't make sense, right? Is this delta mispriced? Is it too low? And I would say it probably is a little bit. But even if this was double what it was, if this was a 14 delta, I'd still feel extremely comfortable with it, right? And so that's kind of where my head is at when I look at something like this. Even though there's a chance that the 7 delta is correct, right? And this thing comes nowhere near 270 in the next 37 days, which is possible. We got to kind of see what happens this week. And I would keep, just all of these kind of in your head, this week. Again, there's no earnings catalyst that we're looking for. So this is really over the next week or so. You just want to kind of watch these numbers, know in your head that this, 260, 270 level is probably the right level where we feel comfortable, and just kind of watch these and see and kind of see how they trade, see how the stock trades. But this is one I would feel comfortable, putting on, today if the stock, comes out and sells off a little bit again, right? So that would be our base strategy. Again, I probably would not go above 300 even on the aggressive side, but you can see this aggressive angle here, even at 300, gives us, over 2% average monthly yield, still gives us a 22% margin of safety and a delta of 14. And again, that seems low. So just given the volatility profile, I look at this and say, would I do this if the delta was 28? If it was double? And I would probably yes, right? I'd take a 30 delta, situation where, we've got this much margin of safety and that risk reward. I think it makes sense. And then on the low end, on the conservative side, I think this 250 makes a lot of sense, right? You've got the roughly 0.5% average monthly yield. You've got a 35% margin of safety, and again, a 4 delta. But again, if we double that delta, even up to an 8, it would still be well within our parameters and kind of, options we've looked at, just recently from those perspectives. So that's the, aggressive base and conservative plays here. Again, I think this is setting up probably pretty nicely to just be a good triple income wheel stock now that it's pulled back quite a bit. The volatility is still jacked, so you can get these really interesting kind of risk reward. And I think if again, we can justify it by saying it makes sense from an earnings standpoint when you look out at the forward earnings on a trough basis. It makes sense. That's kind of where our strike zone is. And then it also makes sense from a technical perspective where that gap is, because I think that when that gap gets filled, or if it gets close to filling, I really think that that's where the stock's probably going to consolidate. And so I feel really comfortable just with that 270 level. So that's the analysis for Moderna. Again, it's a stock that you've probably heard about. We've actually gotten quite a few questions just from subscribers, recently on Moderna. So that's those are my thoughts, and these are levels that that I would feel comfortable with. So any questions, let me know. Again, all this stuff as a subscriber to the Option Income Advisor, you get all this analysis for every stock in our universe, and we cover about 750 stocks that we think are good candidates for the triple income wheel. So take care.